Good morning, everyone. Welcome once again to our weekly broadcast here. It's Thursday, 10 a.m. again. In my part of the world, there's now snow on the ground. I'm not sure about John's part of the world and our special guest, Alex, part of the world. Is there snow today where you guys are?
From my side, I've got sunshine. I'm in Italy, so no snow here.
Yeah, yesterday it was 21 Celsius, so no snow here.
Right. So for a change, Northern Ireland actually is the place of the snow. So there we are. So I've had a few stormy days, and now all of a sudden we are obviously with the snow. A bit late for Christmas, but there we are. Right. Let's get straight into where we are today. And first of all, welcome Alex as our guest. How are you today?
Alex, are you there?
Yes.
Sorry, yes, I am.
Yeah.
Sorry, I didn't.
Sorry, yeah, just said a very brief. Also, as my end or your end. So I was just saying, yeah, very quick official hello to the webinar today. How are you?
Yeah, all good. Thank you very much. As always, David John's a pleasure to be here. Look forward to talking about your kind of weekly topic, as well as a little bit more on the future of living across the UK.
Absolutely fantastic. Looking forward to having you back on again. And of course, the regular attendees know that my special co-host on these webinars is Mr. John Corey. So good morning, John.
Good morning, good morning, good morning. How is everybody? Post
Everybody's
your questions in the Q&A and I can, I'll field them while David and Alex does all the fancy talking.
Yeah. As you rightly point out, Q&A is an important topic for us to keep focusing on. So please do put your questions in and any comments that you want to make and get them into the Q&A. And as you say, we can deal with them as we go along. So starting off, first of all, market property update. And the topic we picked out today really is, I suppose, John, it's we keep returning in many ways to this factor, I suppose you could call it, or factors that lead into confidence in the property market. A couple of days ago, the Financial Times talked about how asking prices have surged in February. 2.3% jump to now 348,000 average house price. And the graph on the right just shows this, what seems to be this continual upward trajectory. But I suppose the key parts of the current discussion are around demand and shortage of stock. So what's your take on the various factors that feed into this?
So I want to promptly rain all over people's joy about this. People have to be very careful about the press articles because they're mostly there to titillate and to sell newspapers, so to speak. And this may be exactly accurate for what has happened in the data. Now, if you look at that curve from 2001 to 2022, can you see the housing crash in 2008? Or does it sort of just look like it's a pretty nice line, okay? But folks, you gotta be aware of what's going on. And by the way, if you were an owner of housing in 2008 in the crash, but you didn't sell it, did it actually crash? No, so there's this, the longevity of your ownership can smooth out a lot of things. That's what I would take away from that line. If you own something over 20, 30 years, you could probably do pretty well. At the same time, if we did a curve of Northern Ireland, we did a curve of the Welsh Valleys, we did a curve in the Northeast, it probably wouldn't look quite as attractive. There's some sections that haven't really done much at all. They've been relatively flat. And then even in the good areas, even in London, if you bought a crappy property and it's in a sort of semi-crappy neighborhood, even though the city looks like it went up, possibly your property is not doing as well. So location, 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 focus on the deal, focus on holding it long-term, don't over leverage, because then that's when you get forced out. And then maybe the good news will happen to you.
Is there a danger, John, that well, no, there's a danger, but there's how would you describe it? The over focus on all the minutiae of what goes into affecting property prices. Sometimes there's just the simple economics of supply and demand, where there's not enough housing stock and there's high demand for stock. Like, it's not rocket science. You're going to have an increase in house prices at that moment in time.
Yeah, those of us that couldn't pass the test and be a rocket scientist. If you look at the demographics, so people have jobs, they're reasonably well educated, the population's growing, it's a desirable location, whatever that may mean, that is probably good for housing. And if you look at a different community where most everybody's on benefits, there are very few jobs for those who want to work, therefore the younger people move away, those neighborhoods generally are in decline. And even in a good market like this curve shows, you'll find in the places I named, Northern Ireland, Welsh Valleys, Northeast, places like that, you're going to find places that they're pretty flat, or they're barely up at all with inflation. So it doesn't take rocket science. The data is all there. The people who affect demographics were born 20 and 30 years ago. We already have the data. So you can look at the data and be smart. You know, is it a neighborhood you'd want to walk down at night? Would you want to send a friend to help collect the rent without a pit bull and a, you know, whatever else you bring? So desirable areas will tend to have people coming in. Alex has got a bit of sun coming in behind him. Living in places that are pleasant to live is actually one of the clues.
Yeah, I think as well, you mentioned earlier, John, about the representation of data, right? Everyone can make data fit their argument, whatever argument that can be. And, you know, I live in the Southeast, but I've got property portfolio in the Northeast. There is a boom in the Northeast right now, but it's very specifically for 3-bedroom, 4-bedroom, semi-detached properties, right? And flats, which has been a staple for many in property and buy-to-let investor. They're not going anywhere. People don't want flats, or the less desirable in a lot of people's minds. So we just got to be a little bit careful about how you interpret that, but interpret that to your situation. And
property type.
Yeah, 100%. And I mean, overall, this still creates a problem in the UK, right? We all know we need to create 340, it's probably even more than that now, 350,000 homes every year. We had a shortfall of 100,000 homes, and that is increasing. So what happens to the rest of the people who can't afford £348,000 and they don't have a house to buy or to rent? What happens then? And that's the part that we really need to address as a country to work that solution out.
One of the things, Alex, picking up on that, you had said 340,000. I remember when the Kate Barker report came out, it was 100,000 a year shortfall. And her report is like 12, 14 years ago. And I say to people, it's like, okay, if there's a shortfall, where is everybody living that can't find a house? Like, how does this compute in my mind? If there's 100,000 people or 200,000 or 300,000 shortage every year, and we just keep compounding that, are they doubling up? Are they sofa surfing? Are they, multi-generational? Where do they go? Or do they leave? Well, no, the population trend says they didn't leave the country. So where are they? They're not on the streets. There are people on the streets, but we're not talking 300,000 people, new members of the street every year. So where are they?
Yeah, I mean, like, I can't comment on every single person, but I do know for a demographic Generation Y and Z, millennials and Generation Z, a lot of them are living multi-generation now because that affordability, both from a rental and also a purchase perspective, becomes too much. So, obviously the council brought in a few years back the levy on people with more than 1 or 2 beds. So they got the bedroom tax piece in. So, forcing people who were maybe single living in a 2 or 3 bedroom house, they were moved out to accommodate more people to be able to move in. So it does look like there is that multi-generation piece going on. It's an interesting topic.
It is not. It's a very interesting topic. And John, I think that actually sounds very much like an Ask John question. Where are the owners and the renters of the 100,000 house shortfall in the UK? So I think that's probably.
I want to know every single one, John. I want a list by Monday, please.
Yes, sir.
No, it had the next Thursday. I'll definitely make it next week's question. So there's a pre-warning, John, for you. Okay, listen, fantastic. Hope people find that beneficial. Just a quick snapshot, if you like, of where the market is currently and the factors affecting it. So the Ask John question for this week What is your view on the potential tokenization of property purchasing and investing? This is something John, you and I have discussed for well, probably for years, in terms of the whole cryptocurrency, although tokenization isn't necessarily cryptocurrency, but this whole move toward tokenization, it's in the news a lot. What's your take?
So I'm going to try to broaden this. So when people hear token, they might think coin or crypto or whatever, and possibly even these days NFT, but non-fungible, which is interesting because I had a conversation yesterday with a manager at a fund who's looking at some crypto related investments. And I said, so what does it mean? Okay, so if I have title to a property, it's at the land registry, is that my token? So everybody in Britain who owns a property has a token. It's called the entry at the land registry. Because when you buy shares in the US, the DTC, the Depository Trust Corporation, holds the physical shares and you get a digital mark somewhere, which is essentially a token. So tokenization happened in the 70s or the 80s, whatever it was. So then if we say, well, what tokenization normally means is, oh, we're going to take a building and we're going to break up the ownership into lots of smaller pieces. Well, I'd say that's what Leo crowdfunding does with shares. Shares are tokens. In fact, if you Google the word token, it'll effectively tell you that. So is the fact that I can go into Leo crowdfunding, buy 1 share, 100 shares, whatever, in a building, tokenization? And I'm buying property by buying tokens. So do we need this digital thing? Do we already have this digital thing? Is tokenization only digital? Well, if it is, but shares are digital, then job done. If we say it's NFTs and smart contracts, well, what does that really mean? Because actually there's a physical building, the title of which is held at the land registry, and maybe there's an SPV listed as the owner, and then that SPV issues tokens. Well, that's a promise that these tokens somehow correspond to that entry at the land registry. So now we're back to promises again. Well, you could argue that Leo's already doing this, so is any other crowdfunding platform.
Well, that's an interesting take on it.
Can I maybe just jump in there? I have a little bit of a, this is something that we're looking at right now, is the tokenization. And I hear John's point, but I feel that, it's about the ease of transfer and looking at how, like John said, tokenization is just basically how you divide an asset up, and shares do that, right? But can you trade shares easily? Is that a liquid item? Probably not, but the way I see tokenization, this is my opinion, is it creates that same division as shares would do if you had like 100 shares or 100 investors, but it makes that much more liquid because you can then trade those coins or those tokens on a platform, which it in itself creates something interesting because you have value associated to that token, which can go up and down based on normal market conditions, but then you have the underlying asset. And I think that's where the exciting part comes from, is that how do you make it liquid and how do you make it easy for people to enter and exit, which maybe not a lot of people can do from a share perspective.
Well, what's interesting, Alex, I understand your point. The London Stock Exchange has liquidity issues in the first half hour and the last half hour of trading, and it's got nothing to do with electronic push a button boom, which is all the token is. It's got everything to do with the buyers and the sellers aren't showing up. So until you get enough buyers and enough sellers showing up at the same time, you don't have any liquidity, no matter what representation you use. So I would argue tokenization in the sense of digital crypto does not increase liquidity unless more buyers and more sellers show up at a common place. And as soon as you do that, you need KYC AML in the UK for tokens that are tied to real estate. So because of that, I don't think we're going to see much liquidity.
Yeah, I think it's like anything, right? It's about when you get that mass movement, and crypto's, still in that position, right? And when you get the mass of people starting to swap over, that's when you have that liquidity piece. But I agree, it's still very much in its infancy, and does it create a benefit?
And they're going to have to maybe publish the driver's license inside of the NFT that gets both, so you can see everybody that's owned it. Well, that'll be interesting.
Yeah. Okay. Well, listen, let's move on. That's a really interesting, again, topic. I think that's something we will be returning to as we go forward, because it's becoming more and more in the news, and more property companies and property professionals are looking at how they integrate the whole tokenization concept in with property. So thank you for that, John. Before we then go to Alex, John, let's just once again highlight our special fundraiser live bootcamp that we're doing 15th, 16th, 17th of March. This is a 3-day, quite intensive look at how to raise funds legally, John.
Yes, it is. What did you want to tell me about it?
I was going to let you tell us about it.
Yeah, it's actually a 3-day workshop. So it's not a sit there, take notes, and go home with all this homework. It's literally work through what you've been doing, what you want to do, creating the outlines of your case study, the raise details, understanding the boundaries, understanding the limits. It's also very much live. Do not sign up for this if you think you're just going to show up some other time and watch the recordings. That's not how it's designed. This is in the room conversations. It's a virtual room, it's online. So don't worry about travel, don't worry about pre-booking your food or anything else like that. So all the benefits of virtual, but all the interactivity of live. And it is very much to kick you off and get you started and fill in pretty much everything you need to know. So in 3 days, all the things you'd need to know and all the steps you'd have to take, so you could raise as much equity as you want if your deals are worth funding. Now, just a caveat and all that is, just because you have a deal doesn't mean the investors with cash are going to like it. So if you have a deal that either can't explain itself or is actually a crap deal, then you're not going to be able to raise the money. But if you have a good deal and you get it in front of enough people, it will get funded.
Yeah. And I was really delighted with the feedback we had, John, from our bootcamp we did in December. We had a lot of people just really pleased with the content, how it was delivered, the discussions. Like a lot of these events, there was huge value in who else attended and discussing and exchanging ideas. So if you're interested in that, if you've got a need or a desire, to raise equity funds anytime in sort of the near to mid future, then there will be significant benefit out of being on this 3-day bootcamp, 15th, 16th, 17th of March. It's running from memory 10 a.m. to 6 p.m. All day, full on.
7.
And
yeah.
7, okay, yep.
So for those that are watching this and it's already past the 15th of March, will they be able to go to the same URL and get a notice as to when the one, because I think we're going to do this again in Q2. Is that okay? So anybody who's watching this late,
it's a good point. Yeah, for the YouTube recording, we'll need to have a follow on or updated link to say what's on the screen. Yeah. So what's on the screen now is how you can go to a landing page, read more details about the event, and of course secure your seat. So you can go
for
there.
Anyone who's not looking at the screen but listening, it's raising-funding.com/class. So raising-funding.com/class.
And is this a virtual 3-day event?
It's a live, but online. Yes.
Yeah.
So you can be in Italy and do this.
That was quick thinking. So And any questions, obviously, on that, just reach out to us, and we'll be having some people who were on the fundraisers, property developers who were on the one in December. We'll be guesting over the next couple of weeks on the Thursday broadcast, just to give their view on how it went for them. So moving on swiftly to our special guest. You've already heard his input into the topics already today. You can obviously get these extremely knowledgeable. You're a real property professional in my book. So Alex, absolutely fantastic to have you here. Do you want to just first of all give a very quick on your background, and then we'll get into this topic of the new model for future living that's your passion?
Yeah, definitely. So thank you very much as always, guys. Great to be on here again. My name's Alex, and I'm the CEO, CVO. Basically every hat that most people wear of a company called CoCity. My background is a chartered mechanical engineer. I also did a bit of rocket science as well, because I studied astronautics and space engineering. So there you go.
Proper mathematician too.
Yeah, I didn't know that about you, Alex. That's news to me. Very
I
good.
set myself up for failure here, really. So, maybe I shouldn't have put that out there. But yeah, I spent about 10, 11 years in corporate life, traveling around the world, but basically putting in place really resilient infrastructure in some very harsh locations. And I pretty much traveled all across the world doing that. And projects up to £500 million in project size that I managed, both from a mechanical and a project perspective, from the development side. So a lot of experience, and I moved into that area at my bank to property about 7 or 8 years ago, and led into the development business CoCity.
So this whole concept, the new model for future living. So just explain, I suppose, the why and the what, and why this is a passion for you. I've known you for a number of years. It's something I know you've been very, very focused on, and probably the whole sort of COVID experience is perhaps sort of magnified, if you like, this whole discussion about what's future living going to look like.
Yeah, well, I think it was a good segue, your first point that we discussed about the housing prices, right? And this disparity of where people actually going, how are people surviving? And just using interest, in fact, Knight Franks did a study last year, and it came out that 52% of the study, and this was for Generation Y and Z, so 18 to 40 roughly, didn't want to own a home. They aspired to rent in some form, if that was co-living or direct PRS, but home ownership was an aspiration, as perhaps it might have been in the past. And it just really shows that this increasing cost, the cost base of living, the stresses of modern urban living, these are all, and the fact that we're also in a loneliness pandemic and not a COVID epidemic, these are all things that kind of contribute to the fact that the real estate model needed to change. And this was our opinion, this has been my opinion for the last 3 to 4 years when I started this project with CoCity. And it was about looking at living holistically, not just the real estate element of a roof over someone's head, but looking at the whole package and saying, right, how do people live, work and play? And how can you use real estate as a way to create this lifestyle focused living, which can kind of meet these demands of modern urban living? And that was really the purpose for it. You can see on the screen there the why and the what. We want to repurpose how people live, work and play, because we feel like we can add a lot more value. And as we all know, there's a decline in high street. This crazy fact, right, that there's 142 million square feet of vacant retail right now, and that's going to increase to over 300 million by the end of the decade. That's like about 25% of high street retail. So we need to repurpose these buildings. We need to bring them into the next evolution. And we created this category of future living, and it's called community-centered flexible living. And I think if you just go on to the next slide, David, I can kind of explain a little bit more about what that means. Now, some of you guys might have seen this because I like to talk about it a lot. I present this as much as I can because I feel like this is where we need to move as an industry. And in the next 5 or 10 years, I hope that this category of real estate, so community-centered flexible living, does become one of the norms, just like you would put it alongside co-living, PRS, BTR, for sale, retired living. These are all sectors and categories of real estate. So it is really simple. We break it into live, work, play. Within the live section, what we tried to do is have mixed tenureship. And there was a report done by Michael Lyon, Leon, a couple of years back, which basically cited that the best way to kind of provide affordable and good styles of living and lifestyles was to create a mixed tenure. And that allowed the more vulnerable people within society to get into a housing system that was safe and secure, but did provide opportunities and benefits. So we bring social housing in there in many guises. We bring private rent to buy, shared equity through to home ownership. The idea being you can level up or across, or you just select what tenureship is right for you in your moment of life. Similarly, for the work element, we wanted to create a space within our developments that allow people to have this hybrid work of living. You mentioned earlier, David, that COVID's kind of accelerated this model for us, but we want people to enjoy their own space. We want people to enjoy the corridors, which are seen as an extension of their space. So we carefully design those elements to allow people to go out, to interact, and then have their own office, service office, co-work and flexibility. So you can really get the best of both in an affordable environment. And then what really underpins that is the play piece, which is basically underpinned by community. And you can see essentially our values along the bottom. So flexibility, growth and community are really important. And essentially we then move into the operations phase and we operate the community. So creating events with the community, not forcing things, but getting those guys to involve themselves. We create the AGMs, events, parties, you know, kind of come dine with me situations, but it's very much an evolution of the community and what they create. And that together, that live, work, play piece, funded by the flexibility, community and growth, is what is community centered flexible living and what we see as the future.
Yeah. I'm always fascinated how any industry evolves, you know, and the three concepts there of live, play, work is something that we've always had, you know, but this idea of trying to bring it all together so they're not three separate areas of our life, I think is quite exciting, really. I know when I came across the WeWork concept 5 or 6 years ago going to London, was quite intrigued by the dynamic of walking into a co-working space and the benefits that come from that. And I suppose this is just evolving that a little bit further, where you kind of live nearby as well, and then you have the element of recreation and play. So listen, I think it's a really interesting concept, and this younger generation, again, this will become almost the norm for them, whereas for us older generations, it's quite a new concept. So I suppose why now then, Alex? What is it that's kind of come together, if you like, and we've mentioned COVID, but even leaving COVID to one side, what's come together in the market and society that means now is a good time for this?
Well, I think, you know, the fact that where retail in the UK, and not just in the UK, right across the world, you know, retail isn't in a great position. So we do have a lot of assets. There's a separate issue about whether these developments in general can become funded, and you know that can be a separate issue. But on top of that, I think loneliness, anxiety, depression is playing a huge contributing factor to everyone right now. You know, the 57% of millennials, 46% of Generation Z all feel anxious, depressed, they feel loneliness in some way. And then if you look at that from a productivity perspective, over 12 billion days are lost at work. It's almost £1 trillion a year is lost because people have these feelings of anxiety, loneliness, depression. So we wanted to just create an environment where you could do everything, but it allowed people to work together. One is as an overall community, but they can still spend their own time. It's not a cult, not something that's forced on you, but a different way that brings all those elements together, as you mentioned, David.
So David, you brought up WeWork, and I think it's fair to say it's a failed business model. And a long time before WeWork got really popular, so long time being 5 years probably, Deloitte, I think, did a study of all the different co-working spaces. And there was like 800 in London. This was an international study, so around the world. They couldn't find any major cities where it was actually in profit, that they were all operating at losses. And it was a new emerging sector, so maybe that's expected, but too many were piling in and people are still refining the model. I think there's maybe, if you think of what Alex is talking about and you say, well, a major city is this, you get a small flat, you do a lot of eating out, you hang out with your friends, you go to the office, whatever. Now, if you just compress it down, people have talked about doing this in a vertical city. So a skyscraper where you have all the different floors, but those are still classically, you know, normal retail, normal apartments or flats, normal whatever. And then you take what Alex is saying, okay, now let's compress that a little, and we can now have more fluid boundaries. So there's a lot to be said for this is how people operate in urban environments. And it's possibly an interesting dynamic going on, but at the same time, people are gonna have to get used to like, well, what does this mean? And I would say from my university days, maybe Alex's too, I don't know about you, David, but we did this at university. You lived in dorms, you had social spaces, you worked in your rooms, you worked in the common areas, you worked at the library or wherever else, you know, you went to classes, you didn't go to classes. These days you can watch classes in your bed or something. But maybe the university life is a microcosm of what this could be without all the sort of focus on everybody's just studying. It's more, this is your life. You're not getting ready for life.
Yeah, that's a very good point, actually. Very good point. So go ahead, Alex. Want to come in on
that? Yeah, no, I think that's a really good point. You know, what we wanted to do was just give people an enabler, right? And this is very much underpinned by technology. So how you transition from social housing, you know, you might meet someone, you go into co-living, you might then decide to get married, you want to rent, or you might then want to go and buy a place, but you don't lose the community like you would do normally if you go through those tenureships. So technology is a big enabler, but we didn't want it to be a disenabler as well. I don't think that's the word, but I've made it up, where a lot of technology creates that loneliness. So we wanted to plug a digital and a physical network in together because there's a lot of health benefits and reasons why that should happen. And just offer that tenureship differential, but bring people in a way that allows them to choose what is the lifestyle for them.
Yeah, okay. Well, if anyone's any questions or comments they want to make, you can fire it in now. We might have time just for one or two quick questions before we wrap up the broadcast this morning.
Put them in the Q&A.
Yeah, put them in the Q&A, not the chat box. What I was going to just say there, just in conclusion to this, is that in some ways it's about choice. As you say, Alex, the trend is definitely people perhaps not wanting to buy their own property. That's not what they want out of their living experience. In the same way, not everyone might want to have this community type environment where you're kind of everywhere you go, you're going to bump into someone, bar your own wee small home or apartment, if that's where you're going to be in. At the same token, some people might just want to be out and live in the countryside still, and urban life isn't for them. So I say it's about choices. It's about providing choices to those who want this type of environment.
Yeah, I think one thing to know is we've got 3 different product models. We call them the hub, the spoke, and the village, and they each cater for someone who wants a more urban-based life in the city, someone who wants a little bit more space out in mid-town location, and the village is then very much a 15-minute city concept, a much bigger scale that people can then fluid between different types of townships on a larger scale. And we did that just in thought process of people want something different. Not everybody wants to live in the city, right? So we tried to acknowledge that.
Okay. I've just realized I don't think I've got your details, but you can reach out to Alex on LinkedIn for sure. Know your do you want to fire down an email address or anything, or if you want?
It's just, you see my name there, it's alex.impey@cocity.co.uk. So that should be fairly easy. You just put an at between the Alex Impey and my name, and there you go, .co.uk, alex.impey.
Fantastic. Well, thank you for that. And we'll definitely be back on again at some point and talk about how this is going on with some of your projects. We've been doing a bit of a roundup of all different types of property sectors. And it was really, really good to hear your views on this sort of CoCity type concept. Absolutely fantastic. So thank you for that, Alex. I'll let you have a 30 seconds at the end when we wrap up. So literally just finishing off then. Again, just for those who maybe missed last week's, as a platform, we've had 2 projects successfully pay back. So we're continuing to be enjoying the success of that. So it's always when you start projects and you have no guarantee how they're going to go when you get to the end. And I know the feedback, John, some of the investors who saw the money land back in their e-wallets with their return on investment. Yeah, we got a lot of very nice messages to the platform last week.
I mean, success is always positive, and having positive returns, positive profits coming back in is always good. It begs the question of, okay, what am I going to do next with the money? And a hint to everybody is to diversify that. Never put all your money into one project, because dead kings under car parks happen and things like that. So do look at multiple projects to diversify your risk across different teams.
Yeah. So those who invested in the Becontree Avenue project in Chadwell Heath from PLMD, this obviously closed last week, 161,200 from 39 investors, 161% of the minimum target. So you will be receiving your copy of the draft shareholder agreement probably tomorrow, and I'll give you a chance to review that. And this then is due for those to accept the shareholder agreement and draw down their funds by about Thursday next week. So just letting you know that timeline. And we had hoped to have this view deal today, didn't just quite make it, still going through the last bits of DD, reviewing the financials and getting it approved. We're almost there. And this is the next project will be live on the platform for investment from target
So
5.
as coming soon, does that mean people can get more information, or is this more or less the level they'll see?
No, this at this stage is just literally that.
Okay.
So whenever it goes view deal is
Yep.
when they'll be able to click through and actually access the information, which hopefully will be in the next few days. We can stay tuned on that. So next week, we're actually going to do a deep dive into emergency housing. We did have a wee skip over social, affordable and emergency housing last week. Really brilliant engagement from the attendees, probably the most engagement we've had on a broadcast. There's clearly interest in these sectors. So we're going to have a deep dive into emergency housing, and we're having some conversations with a company called UK Property Angels. They have a number of people involved in that company, but their passion and their vision is all about emergency housing and providing emergency housing, particularly around London. So we're going to have a couple of members of the UK Property Angels team will be on the broadcast next week, and we'll be deep diving into this whole concept of emergency housing, particularly in and around London. And that is that for today. So thanks everyone for joining us. Alex, any last 30 seconds before John has his?
No, I think that session you're going to have next week, I know a couple of guys from the UK Property Angels. I think that'll be a great session. And again, it's good to just about understanding the different tenureships available, and there are ways to make those profitable from an investor's perspective and developer's perspective, and it's good to get that wide range out there. So great.
Fantastic. Thank you for being here today. John, any last comments?
No, other than I'm looking forward to the emergency housing topic. I know a little bit about it. I'm looking forward to know a little bit more.
Fantastic. And if anyone's got advanced questions, then by all means, email them to us in advance or just be on the broadcast next week and stick it in the Q&A. Listen, thanks, Alex, again. Thanks, John. Thanks, all the attendees. See you next week, 10 a.m. Thursday, weekly broadcast. Thank you. Bye-bye.
Take care now. Thanks.